Hi students, welcome to the video on financial accounting at your fingertips. In this video, we are discussing partnership and partnership firm and the preparation of trading profit loss account and balance sheet of partnership firm. Already it is discussed in previous two videos. This is the third video on which we first focus on the adjustments on hidden adjustment, that is typical or hidden adjustment which is given inside the trial balance. So all of you know what is given inside the trial balance. You have to see what is the narration given. That means here it is given salaries or rent paid. Below that it is then for 10 months. That means 1 lakh salary paid. Suppose it is salary paid 1 lakh. That means 2 months salary is outstanding. So it is salary outstanding. All of you know it is 2 months means for 10 months 1 lakh. For 1 month 10,000. For 2 months it is 20,000. When salary outstanding is there in profit loss, under his salary we will add salary outstanding. Add outstanding, salary outstanding. And balance sheet, liability side, we will write salary outstanding. This is the adjustment. Liabilities. That is salary outstanding. Here insurance prepaid for 1 year. Here insurance is paid up to year ending 30th June 2024. 30th June 2024 means account year ends on 31st March, so 3 years paid in advance. For 12 months it is 60,000. For 1 month it is 5,000. For 3 months 15,000 paid in advance. So all of you know you have to deduct it from insurance premium. Insurance premium less prepaid. Prepaid is 15,000. So insurance prepaid is assets. So current asset. Balance sheet asset side, insurance prepaid. This is under current asset. Then advertisement expense. All of you know advertisement expense, debit revenue expenditure. Neither revenue nor capital. Means when we start the business, then initially we made a major investment to popularize the advertise our business. So suppose this benefit will give for 4 years it is given. We spend 2 lakh, so it will give benefit for 4 years. So from conservative point of view, every year we will charge 50,000 only. That means we will write on profit or debit side to advertisement expenses. That is 50,000. Balance sheet life side, that is 3/4. That is 1,50,000 will be taken on fictitious asset under there. Advertisement expenses, that is here advertisement expenses written of 50,000 for current year. Then in the balance sheet remaining is 2 lakh minus 1/4, that is 50,000. So we will show 1,50,000 on asset. Then rent received 2,20,000 for 11 months. So we have received rent for 11 months, but as per the accrual basis of accounting, we have to consider the 12 months rent. So rent received is your income. When you have received for 11 months, so it is 20,000 per month. So 1 month rent you have not received, or business has not received. It is accrued rent. So on the profit loss credit side, profit and loss credit side, if rent received is given, because it is 2,20,000 rent received, then add accrued interest for 1 month, that is 20,000. In the balance sheet it is asset, so write accrued interest, accrued rent. The amount is 20,000. Then fifth, 10% loan of 10 lakh. Borrowed, it is borrowed means it is a borrowed means it is a liability. We have borrowed it 10 lakh. So 10% 1 lakh for 1 lakh interest we have to pay. We borrowed on 1st January and account year ends on 31st March. Only 3 months interest on loan we have to give because we have borrowed. Then 10% on 10 lakh is 1 lakh. It is for 12 months. So for 3 months, 1 lakh into 3 by 12, that is 1 by 4. 1 lakh therefore is 25,000. So 25,000 to write on profit and debit side, interest on loan. 25,000. So under the head liability loan, liability under the head loan, that is 10 lakh, loan 10 lakhs, add accrued interest on loan, accrued interest, because we have to, business has to pay, that is 25,000. So 10 lakh 28,000 will be considered under loan. Then 10% invested on 5 lakh. So per year it is 50,000. It is purchased on 1st October. Investment, you have invested, it is your asset. So business is entitled to get interest of 50,000 per 12 months, per 6 months it is, that is 25,000. So 25,000 profit loss credit side. Then it will be written profit and loss account credit side by interest on investment. Interest on investment. Then balance sheet asset 10% investment, 10% investment, that is 5 lakh plus accrued interest on investment, accrued interest, that is 25,000. So 5 lakh 28,000 is under asset, 5 lakh 25,000. Then last but not least, 10% government bonds on 5 lakh means 50,000. But interest so far received 20,000. So on profit loss credit side, profit loss account credit side, by interest received is given 20,000. So you add accrued interest another 30,000. So you have to show 50,000. Accrued interest, that is 30,000. So accrued interest is around in balance sheet asset. So 50,000 you have shown on profit loss credit side. Then balance sheet asset 10% government bonds 5 lakh. Then accrued interest 30,000. So total you show under asset 5 lakh 30,000. This is all about the hidden adjustment given inside the trial balance. Then we will solve one problem. We will solve one problem related to, that is Gupta traders. We will solve the problem related to Gupta traders. Here it is given Messrs Gupta Traders is a partnership firm in which Rajesh and Naresh are partners sharing profit and losses in the ratio of 3:2. Means out of profit, Rajesh will get 3/5 of profit. Rajesh share, that is 3/5 of profit. Then Naresh share 2/5 of profit. This is given first. Then from the following trial balance, prepare the final account for the year ended 31st March 2024. Here it is given opening stock 3,60,000. All of you know opening stock will be taken on the credit side of trading account. Sorry, debit side of trading account as opening stock, that is opening balance. So here you will prepare trading account of Messrs Gupta Traders. For the year ended, for the year ended 31st March 24. Then we will do one thing. So write to opening stock. Amount we have written, that is 3,60,000. This is our first. Then capital account Rajesh 16 lakhs, Naresh account 8 lakh. When capital account and current account both are given, it is under fixed capital method. Because under fixed capital method, capital account will reflect only the capital invested in the business. That is 16 lakh, 8 lakh. Closing capital will also be same. There is no adjustment because no additional capital is given. So closing is 16 lakh, 8 lakh. Then current account, whatever adjustment do, we will do under current account. So we will prepare one current account of partners. That is current account. So this is current account to partners. Okay. This is current account. So on current account, write this is debit side, left hand side, right hand side, credit side. This is particulars. Then this is Rajesh. Two partners, Rajesh, Naresh. Then particulars, Rajesh, Naresh. So it is given current account Rajesh credit balance 80,000. So write by balance brought down Rajesh, that is 80,000. And Naresh is given debit balance 40,000. So to balance brought down Naresh, that is 40,000. This is the first opening balance. Purchases 10 lakh. So purchase should write here two purchases 10 lakhs. Then sales 20 lakh 80,000. Buy sales 20 lakh 80,000. Then sundry debtor will be taken on the balance sheet asset side. Sundry debtor balance sheet liability side. Bills received balance sheet asset side. Bills payable balance sheet liability side. Then commission wages. Commission, here we will prepare the profit and loss account of Messrs Gupta also. Trading account, then profit and loss account. Then here we will write to commission. It is debit means commission paid. That is 28,000. Then wages, it is direct expenses. All of you know trading account bears all direct expenses of the business. So 17,600. Then salaries, it is indirect expenses. I already told you, if it is given salary and wages, you take it in profit loss account. If it is given wages and salary, you take it in trading account. That is very critical for the students to understand. So whatever given first, you consider that. Suppose it is given salary and wages, you treat it as indirect expenses, take in debit side of profit loss account. If it is given wages and salary, you treat it as direct expenses, you take here in trading account. Then furniture is asset, balance sheet asset, plant and machinery balance sheet asset, reserve for doubtful debt, it is profit loss credit side, and we can deduct it from profit loss debit side also from reserve. Investment asset, loan given asset, insurance. Then insurance will write here, some adjustment is given for insurance, that's why I am writing here 28,000. Then bad debt 5,000, 12% government bond. This is hidden adjustment, because we have invested 1,50,000, taking 12% means 18,000 per annum, but it is purchased on 5 January, year ending 31st month, 3 months will get. So 18,000 divided by 4, that is 4,500. That will write by interest on, this is hidden adjustment, interest on investment. So 4,000, sorry, here we have to write first by gross profits. So here we write by interest on 12% burnt, that is 4,500. Then adjustment given, closing stock 3,80,000. It is having whatever given inside in the adjustment having double side effect, so it will be taken on the credit side of trading account and balance sheet asset by closing stock. Then it is 3,80,000. Then here third adjustment, Naresh allowed Rajesh is allowed salary of 60,000. So Rajesh by profit loss hyphen salary, that is 60, Rajesh 60,000. So here salary paid to Rajesh, that is 60,000 will add here, that is 90,000 you can write here. Then Naresh is allowed commission of 3% on sales by profit loss commission. So Naresh is getting this 3% on sales, means here it is 20,80,000 3%, then 62,400. Naresh 62,400. So preparation current account is very vital. Then interest on partner's capital 5%. By profit loss, interest on partner capital. Interest on capital. How much? Here he has invested 16 lakh, 5% 80,000. Rajesh will get 80,000 and he will get, that is 40,000. 50% is invested 8 lakh. So 40,000. Provision for depreciation. Provide depreciation plant and machinery 5%, furniture 10%. 30,000 from customer not recovered, that is bad debt. Generator, we have to deduct 30,000. Here bad debt will adjust. So it is written to bad debt, here written 5,000. To bad debt, that is 5,000. And here provision for bad debt. Provision for bad debt, that is new. New is given 30,000. Already existing is 10,000 less bad debt old, that is existing 10,000. So 38,000 minus 10,000, it is 25,000. So 28,000 we have shown here. Then regarding depreciation, right, to depreciation on plant and machinery, you remember it is given 5%. So plant and machinery value is 6,30,000. 5% means 31,500. 31,500. Furniture, depreciation on furniture, it is 10% on 2,50,000, that is 25,000. Another adjustment is your prepaid insurance. It will be deducted from insurance less prepaid, that is 5,000. So we will show under head insurance 20,000. So we see whether everything is done or not. Then yes, commission we have taken, wages taken, salary is taken, depreciation taken, results already adjusted, invested nothing given, loan nothing given, insurance adjusted, bad debt adjusted, 12% government bonds taken, everything taken. Now we will prepare the net profit of the business. Here this we have not taken, I think. Interest on capital, commission taken, commission not taken, salary 60,000 only salary we have taken, we have not taken to commission to Naresh The amount is 62,400. Then to interest on capital. Interest on capital. This is how much? 1,20,000. This is over. This taken. Bas. So profit we have to calculate first gross profit because credit side is heavier. Here 64, 24,60,000. So write to gross profit carried down. Amount is, so total is 24,60,000. So difference is 400. Then 1000, 24,60,000 minus, here it is 600, here 77, here 3,60,000, 13,60,000, 13,77,600, 77,600. So gross profit is here 400, then here 2, 8, 6, 10. No, it is sales is 20 lakhs. This is closing stock. So 24,60,000. Here it is purchase is 10 lakh. Then opening 3,60,000, 13,60,000 plus wages 17. So 13,60,000, 13,60,000, 13,77,000, 13,77,600, 13,77,300. So it is 400. Then 2, 8, 0, 10. 10,82,000. 10,82,400 is the gross profit. So it will be carried to profit loss by gross profit brought down. That is 10,82,400. So total comes to here 10,900,000, then 6, 8. 10,86,900. So debit total we have to do. This is 28,000. This is 30,000. Then 60,000. Then 20,000. 25,000. 31,500. 25,000. Then 62,400. 3% sell. Then 1,20,000. So total how much is the total here? Then it is 31,500. 900. Four lakh 1,900. So total is 10,86,900 minus 4,01,900. So net profit is 6,85,000. 6,85,000. So 6,85,000 to third to net profit. To net profit transfer to capital account. So here to net profit transfer to current account. This is here net profit transfer to current account. So how much is the net profit? Here we have to write by profit and loss account net profit. net profit. How much the net profit? 6,85,000 divided by 5. Then 1,37,000 into 3. Then 0, 0, 0. 4,11,000 here, then 2, means 2,74,000. Okay, so here we'll calculate. The net profit we have already done. 4,11,000 and 6,85,000 here, 6,85,000, so it is over 6,85,000. Then we will prepare to balance carried down. We will write to balance carried down. 4,11,000 here, 4,11,000 here. You deduct 40,000. Suppose 62,400, 2,74,000. 2,74,000. Then 62,400. So balance is 400, 6, 3,36,400, 3,36,400. So it is 4,11,000. How it is 4,11,000? 4,11,000 plus this, na? 80, 60, 80. 1,40,000, 2,20,000, then 6,31,000. 6,31,000. So this is 6,31,000. So we will prepare a balance sheet. So we have to prepare now balance sheet of Messrs. Gupta Traders. आज on Messrs. Gupta Trader आज on 31st March 2024. So this is the balance sheet. You have to prepare the balance sheet. Then here it is, liabilities, then amount, assets, amount. So first to write capital accounts because it is under fixed capital method. Capital account. So Rajesh 16 lakhs, Naresh 8 lakh. So we'll write 24 lakhs. Here 24 lakhs. Then we'll write current account. Current account. So Rajesh 6,31,000. 31,000, sorry. 6,31,000. Then Naresh 2,74,000. 3,36,400. 36